Today's video is the final chapter in the Donor Advised Fund series. Now, it's been a while since my first two chapters, so you can go back and watch them if you need a refresher on the basics of donor advised funds. But today we're going to be looking at a specific example and a case study of how you can use a donor advised fund strategically to reduce your taxable income, right? Now, if you remember, the best times to use it is when you have an unexpected windfall, right? When you have higher taxable income this year than you expect in future years. You can then make a donor advised fund contribution to lump together a bunch of future contributions to be able to itemize deductions and reduce your taxable income that year. So what we're going to be doing is I'm going to be sharing my screen and going through a scenario where someone's doing a Roth conversion of $100,000, right? And what kind of a donor advised fund will look like to reduce the taxable income that year. So I'm going to go ahead and share my screen here. All right. As you can see on my screen here, we have three scenarios, right? So I copied over scenario one, which is the basics, and we're keeping everything the same. W-2 wages, dividends, capital gains, deductions, everything, right? Except in scenario two here, you'll see right here in the middle that they are making a $100,000 Roth conversion on top of their income. So we can go ahead and scroll down to the bottom here, and you can see that that will increase their total tax by nearly $30,000, right? So you're going from $107,000 to $143,000 in tax. The scenario three right here, right? So while they're also doing a $100,000 Roth conversion, in the same year they are going to fund a donor advised fund with $100,000 of cash or stock, whatever it is, and they're going to get the deduction, right? So in this example, we're going to be using cash. So they fund it for $100,000, and you can see the outcome here, right, is it now reduces their taxable income by about close to $30,000, right? So you're pretty much offsetting what you would owe additionally with the Roth conversion by doing a donor advised fund. Remember, that donor advised fund can now be invested and grow and be used at your discretion to whichever charities you want in the future. Again, if you have any questions about these strategies or how they might fit into your life or your financial situation, feel free to find my information. I'd be happy to help.